Hi everyone, and welcome to another episode of the monthly economic update for the month of July, brought to you by the Economic Intelligence Unit through our platform Economy.lk. So to start things off, we'll talk about economic growth. What we see here in this particular graph is that the quarter one of 2024, Sri Lanka experienced a growth of 5.3%. And it's leveraging on the growth that it had since quarter three of 2023. And where is this growth coming from? If you look to the right of your screen, quarter one year-on-year sectoral growth is coming mainly from the industries, where it grew about 11.8%. However, it should be mentioned, in 2023, the industry sector contracted by about 24.3%. So it's growing, but from a lower base. And moving on, in terms of economic performance, what do we see here in this particular graph? We see here the PMI index for manufacturing, services, and construction. Now, if you look at manufacturing, it's at 56.6, services at 63.5, and construction at a 30 consecutive survey round high at 59.5. All three indices are above 50, indicating that all three sectors are expected to grow in the future as well. That is encouraging to see. And then staying on economic growth, what you see here in this particular slide is the latest projections by all the donor agencies, IMF, World Bank, ADB, and the central bank as well. And if you notice, ADB and World Bank are a little conservative, whereas IMF is a little bit more optimistic. The central bank is even more optimistic, and the central bank governor actually recently mentioned that they are quite optimistic that the economy would grow at around 4% within 2024 as well. And moving on, what we see here is inflation. Inflation is slowly picking up. It's at around 2.4%. CCPI headline inflation at 2.4% in July, up from 1.7% in June. And if you look at the core inflation for the Colombo Consumer Price Index, it's at around 4.4%, staying the same since June as well. If you look at the National Consumer Price Index, that's at 2.4% for July, up from 1.6% in May. And the headline inflation for NCPI is also at around 1.5%. So what we see here is a base effect mainly year on year. If you consider month on month, the increments are very gradual and very small. And moving on from inflation, if you look here, what I have noted down here on this particular slide is economic growth and inflation. These are projections by the IMF. And as you notice here, inflation is hovering around 5% till 2029. And interestingly, 5% is a target that was set by the central bank and the Ministry of Finance with a margin of error of about plus or minus 2%. Now that is because the central bank new act states that the most important primary objective for the central bank is price stability. And moving on from this to the external sector, what we see here is monthly export earnings slowly picking up. Where is this coming from? Well, you can see that the industrial exports are slowly picking up from Jan to June 2024 compared to the previous year. And in terms of import expenditure, it's also slowly in 2024, the red line is slowly picking up. And that too, where is it coming from? Mainly the intermediate goods are slowly picking up. And if you look at the merchandise trade specifically on this slide, you see from Jan to June about $6.1 billion of exports and $8.86 billion of imports. So trade gap for merchandise around $2.5 billion. And if you look at the services sector inflows, it's at around $1.7 billion, mainly coming through sea transport at $491 million and IT BPO at $395 million. And if you look at remittances inflow for the year 2024 first half, it's at around $3.1 billion. And if you look at tourism earnings, that is at around $1.56 billion. Moving on, with all these developments, you see that the LKR is appreciating. And as you can see here in this particular graph, the LKR has appreciated around 6% for this year. And gross official reserves are at around $5.7 billion in June 2024, and this is compared to end 2023, where our gross official reserves are at $4.4 billion. And now moving on to the monetary sector, what you see here is all the interest rates are coming down. This is mainly because recently in this month also the central bank reduced its policy rates by about 25 basis points, indicating to the market that the rates can further come down. And what we see through the rates coming down is growth to the private sector increasing, and that is what you see in this particular graph over here. And compared to 2023, there's an uptick in 2024 credit to private sector. And to the right of your screen, you see which areas, which sectors are gaining the private sector credit growth. And if you look here, the percentage share is highest in the industry sector, followed by personal loans and advances. And then if you look at the fiscal sector, these are again projections by the IMF up to 2029. Now, what is important is for the government of Sri Lanka to maintain the primary surplus balance of 2.3% going forward. That is the main target for the government. And the public debt as at end March 2024, that is what you see here in this particular graph. The domestic debt is at around $57 billion. External debt is at around $37 billion. And with all these developments, what we see here is the business sentiment index. Now, if you look at this particular graph, business sentiment is slowly picking up, which is very encouraging to see. And in our new monthly economic update, we have also now started to work with the world in collaboration with the World Bank to bring you Weather Watch, which is basically about 2 weeks of information projections on how the weather patterns are changing. And what you see here in this particular graph is from 22nd July to 29 July and 29 July to 5th August, how the weather patterns are changing and how this would impact your business. So we would really encourage you to give us feedback on how we can improve this and how it would help you all to bring you more information on weather pattern changes and how it would impact your businesses. And then finally, on the global economy, what we see here in this particular graph is the world economy growing steadily, driven mainly by emerging market developing economies. So that's a wrap for the monthly economic update for the month of July. Stay tuned in for the next episode for the month of August. Thank you very much.